Welcome back to 4D Sci. I am, as I always am, Victor Ciccarelli, and I'm here today with Mr. James Barrineau, and we're going to talk about the financial world and AI and all the stuff that's going on. James, hi.
Thanks very much for having me.
Okay, so tell everyone who you are. What do you do? How did you get here? And all that kind of good stuff.
Sure. So I spent 25 years on Wall Street. I worked for a number of major institutions, Citigroup, Alliance Bernstein, Schroders, a hedge fund. I was an analyst, strategist, portfolio manager. I led a team of fixed income analysts in a investment franchise. Uh, After my Wall Street career, I've been consulting for registered investment advisors. So I talk to a lot of investment firms and financial advisors. I help place financial advisors into firms. And in my spare time, I'm the chief investment officer pro bono for a small foundation.
In your spare time. So
Yeah,
with that background, sounds like you had a lot of spare time hanging around.
not a whole lot.
So, um, normally we're talking a lot of tech subjects, and I understand. I got to admit, I know next to nothing about the financial industry. So, you're gonna have to make me smarter today and understand what I don't know. I don't know. But the core of the conversation is how AI and technology is changing Wall Street, and I would imagine in 25 years you've seen some monumental changes.
Monumental changes. And, we've gone, every aspect of the business has been revolutionized by tech already. So it's resulted in a ton of benefits for investors, small investors. Your costs to invest have declined. The quality of advice you get, I think, has improved. Wall Street still puts out a lot of products you probably shouldn't get involved in. Uh, so, so if they can make a buck on a product, even though it's trendy and uh, possibly not suited for everybody, they will certainly put that on the shelf and see if it flies. That hasn't changed. That's an eternal truism in investing that's going to be there, even as AI kind of sweeps the landscape. So yeah, we've had some monumental changes, but it's this is such an interesting industry because some things are almost eternal in the industry. I mean, you look at a guy like Warren Buffett, who is as old school could possibly be, unbelievably successful, hasn't been really challenged in his results by every other new thing that's come on Wall Street. And at the end of the day, it's a judgment business. So the ability to make good decisions, calculate probabilities, not allow your emotions to get the best of you, those are eternal truisms in investing that are going to be there no matter what the impact of AI is at the end of the day.
So let's talk about AI. How is it being used? What are they doing with the technology? I mean, we all hear the hype, AI, it's taking, but in reality, what is Wall Street doing with it?
So it's interesting. A lot of the things that Wall Street is doing with it are the same that any other industry is doing with it, in the sense that if you have an aspect of the business that is grunt work heavy, AI can really do incredible things for you. One example is the compliance industry, which probably nobody has ever heard of or cares about for the average investor. But for an investment firm, it's a very big deal. So, what you have to do has to be compliant with the SEC and all the regulations. and everything. And the record keeping is unbelievable. The costs are incredible. And it's really one reason why the whole industry is consolidating, because these costs are just too much for small and medium sized investment firms. But AI can radically reduce the amount of time you spend on compliance issues. So let me give you an example. One of the things about compliance is when I worked on Wall Street, I couldn't invest my own money unless I filled out a form, got approval from the firm. I'm going to buy, Apple today in my personal account. May I do that? And then they come back and say, yes, you may. Because if the firm is buying Apple that day, they may say, you have to hold off a day. You can't do it today. That's part of the compliance process. So if you can smooth out things like that, you can save a tremendous amount of time. You can probably lower your personnel costs. Credit assessment is another thing. I think everybody is going to be touched by this. The ability of a credit rating agency to, deem you credit worthy is going to go to a whole different level. You're going to look at factors maybe that credit rating agencies have never looked at, rather than the traditional, how long have you been a customer? Have you ever defaulted? Have you ever been behind on your loans? There may be factors out there in your lifestyle that affect credit worthiness that we've never even thought about. You can take an AI tool and do that and really improve credit assessment. So it will definitely save banks and financial institutions money on that example. And then there's the research example, researching good investments for people. That takes a lot of grunt work in terms of looking at companies' results, forecasting what their results are going to be for the next quarter, et cetera, et cetera. That can be hugely enabled by AI. So all of those are time savers. Some of them are personnel savers, but at the end of the day, you're still going to have people looking at the results of this. So I personally think some of the hype around it's going to wipe out everybody's job is a little bit overstated. Yes, some low-level back office jobs will be removed, but when you look at the advances in the financial industry, I'll give you another example, is a lot of credit analysis has been moved to India, for example, where you have really smart people who've been highly educated, who will work for pennies on the dollar compared to a Wall Street guy. So what Wall Street has done is farmed out a lot of this credit analysis to these junior people in India who do the same type and pretty much the same level of expertise of credit analysis for a much smaller cost. So the march to have efficiency and reduce costs has been underway for a long time. But you still have to have somebody look at that AI output and determine whether it's actually accurate. Just to give you an example, I don't want to go on too long in this answer, but just this morning, as I'm thinking about the foundation I run, I'm thinking about doing a trade where I can write an options contract on gold. So there are exchange traded funds where you can do this. I get on an AI tool, I ask them, list all the exchange traded funds that I can consider to do this particular investment strategy. So it came up with an output, and the output did not list all of the funds that exist. It listed two of them. And I knew from previous research that there was at least one more out there. So that's an example of where, you've got the output. it's incredibly great to get that output in 30 seconds when it might have taken me, 10, 15 minutes on just a regular Google search. That's fantastic. But you still have to look at the output. You still have to give it a sanity check, and you're still going to have humans involved.
I got a number of questions I want to go off from there, but let's stick to that one, which is the accuracy. I work extensively with commercial facing AIs, with Gemini and with ChatGPT and all the public facing ones. The hallucinations are horrible.
Yeah.
And the thing that you just pointed out, which is I'll ask it for where I know there are 10 answers and it gives me two. If I didn't know that it was missing that data and I use that data, there's a problem.
Yeah.
Now, if we're talking financial markets, are we talking about basic consumer facing AI systems, or are these custom systems for the financial markets that have some kind of better accuracy? And I would assume because they're more focused on the answer.
Yeah, so it's a mix of both. So when you get into compliance, it's almost a legal, very specific kind of legal field. And there's also legal departments in every financial firm. So with a very narrow kind of focus, so that you can develop an AI tool. I'm not an expert on them, but you can have a very narrow range of plausible answers that you can come up with. Look at the history of case history, etc., and it's great. But once you broaden that out, then you're in the issue that you just brought up. For example, I went on one of the common AI tools a couple weeks ago, and I said, please list the top performing stocks in this sector over the last 3 months. And it gave me a list with their performance that was 100% wrong. And I knew this because I have all sorts of services and software and stuff. So I knew what was in the ballpark. I just wanted it generated quickly for me in one place that I could take a look at. But it was had zero value. So your point is the logical conclusion, I think, is you still have to have an expert looking at this stuff. So the people at the expert level or the highly educated level or the deeply experienced level, those people can't go away.
I agree, and no one expects a human to be perfect. We all know that if we had a human doing the job, the inaccuracy rate would probably be way higher than
Right.
if we put AI. But the problem is that as a society, we're starting to trust AI, and we're assuming that it's going to be 100% correct all the time. And I want to kind of tie this together because you talked about reducing people on the back end. I have a problem with what's going to happen 10 years from now when we start cutting out a lot of middle management. We don't get those experts because people don't learn on their way up the ladder. So as we're reducing costs by taking away people, how and I'm not asking you to speak for the entire industry, but in your experience, how can we meld those two when we have a system that's inaccurate, and now we're not training as many junior executives to become senior executives? What's our future going to look like?
So that's a fantastic point. So I think what's going to happen is you're going to get some firms that lean too heavily on AI, and they're going to make a mistake, and it's going to wind up in a $10 million error or something like that. And people will realize, oh, we've cut to the bone too much. We need one more guy on the team who really knows what he's doing, who can catch this. So there's definitely going to be instances where people buy into the AI hype a little too much. And the wisest firms, I think, are going to understand your point and ensure that there's always a pipeline of guys. You know, you can have a junior guy fresh out of college, 2 or 3 years out of college, starting on the basics, learning the basics, and maybe he's looking at the, least impactful AI uh, impact to the firm, and learning to make a judgment as to whether that's correct. And then he's sitting on the desk besides guys who are more senior, can show him the ropes, and eventually he becomes a seasoned professional who really knows what he's doing. But that's a great point. And what's going to happen, I am absolutely sure, is there's going to be some financial institutions that take it too far and lose 10, 15, 20, $100 million on a trade, and then they're going to understand that everything's got to be triple checked anyway.
Well, I mean, I don't think there's ever been a new technology that's been introduced that some people haven't gone too far with before it was
Yeah,
ready. I mean,
exactly.
that's just our human nature. We love the new tech, and we learn those painful lessons that technology is a tool, not a peer.
Yep.
Okay, so one of the things that I think a lot of us see is the loss of personal touch. I mean, you talked about how financial decisions are now made by the computer rather than by your banker. That you don't have that personal connection. Is it better in two cases? Is it better for the person, and is it better for the industry?
It's not better for the person or the industry, but I think there's a broad acknowledgement on this point that you have to have that human touch. So a financial advisor who sits in Merrill Lynch or any financial advisory firm, he's not going to go away. You need somebody to, you know, hold your hand, for lack of a better word, on your finances, because finances are never not going to be an emotional issue for people. I don't care how much tech takes over the industry. So you're going to need that, and you're going to need an advisor who knows the AI tools that can help him, and knows the AI tools that could potentially hurt him. So uh, yeah, there's some time saving stuff. It makes his job, the average financial advisor's job, better in a way. So I've seen the rollout of these AI tools that help advisors look for potential clients. So, an advisor could spend half his day looking for people with money, networking, et cetera, try to build his book of business. AI tools can help him do that in a much more refined way. That's great. But once you get that business, there's always going to be a need for somebody to really explain it, hold the hand of the client, talk about the markets with the client. Hopefully, that's never going to change in the financial industry.
Now, for those of us who don't have enough money in our accounts to have our own financial advisors, and we're more on the pedestrian side, is AI a good thing for us to look at to help? I mean, we all get that don't ask medical advice of Chat GPT. Um, how does that play out if I'm going to use some of these online AI trading tools and this plethora of new stuff coming out? Are they any good?
Um, I use a trade tool called Trade GPT. You may have heard of it. Um, and it's good, but it gives you a range of options. At the end of the day, the thing I love about finance my whole career is it's really a thinking and a judgment game at the end of the day. You really need sound judgment. You need to think in terms of probabilities. You need to be reasonably well educated on what works, what has worked in the past. and keep your emotions under control. Emotional intelligence in finance is probably more important than a PhD from MIT, and always will be, in my view. So you can be helped by those. So if I use Trade GPT, it can give me um, some options for what might be the best way to put something into the portfolio that I manage that can perform a specific function. Let's say I want to generate more income in the portfolio and I don't want it correlated to the stock market because the stock market is going crazy. What are my options to do that? So it can give you options, but as I gave you the example earlier, you can't trust that those are all the options. You have to check that those are, you have to do additional research on top of the AI to ensure that you know which one of those is the best option. So it's a time saver, but it's never going to be a judgment saver. And I know people think it's going to get there, or maybe they believe it's there now, but it's to your own detriment if you take at face value what you see.
Yeah, I mean, those of us who've been around for a while, I mean, the dot com bust and boom is a perfect example. I mean, we all have to remember at one time there were over 50 different search engines on the internet, and every one of us, some of the classics, Yahoo and AOL, they were going to take over the world. And it took a while to distill down what was real and what was fake. And, the dot com bust kind of brought that into focus where there were real players, hence Google, rose from it. And I think AI is going to do that same thing. I mean, you hear people talking about the AI bust coming, and it's because there are so many products that claim so many things. But I want to touch on something you said. You said that the education. And again, if I'm asking you questions outside of your area, I apologize. But for the average person like me, what is the best way for me to become educated at this point in my life about the things that I need to know and I need to watch out for?
Um, I think there's a bunch of common sense guides out there. There are common sense books um, that you can um, that you can access. So there's a lot of self education. I would be skeptical about education that comes directly from a financial firm because they are 100% trying to sell you something, even if it doesn't appear like they are. Um, so I would read widely, um, and um, there are some timeless lessons. Diversify your portfolio. Don't put all your eggs in one basket. Buy low cost ETFs, not high cost mutual funds and ETFs. Go to Vanguard. There's a couple of super highly respected ETF firms like Dimensional Fund Advisors, Avantis, that just put out really top notch funds that are very intelligently constructed. So there's a number of those. Just stick with those, diversify your portfolio, and you'll be fine. But, you know, the whole thing about tech and the wave of AI is to embrace it with caution because um, it's going to it's going to result in some busts, like you said. We're going to have the same landscape littered with failures and littered with instances where someone took an AI answer and did well. We already have those. Something terrible happened, as a result of that. So it has to be done with caution. But if you remember those very basic eternal truths of investing, you're not going to go too wrong.
Is it too soon to be listening for the average consumer? Is it too soon to be listening to AI?
Oh, that's a great question. Honestly, I think the answer is yes for the average consumer. I think what's happening in some of these applications, like the Trade GPT thing, they're always making improvements. It's getting better, but people who are pretty knowledgeable, I've been doing this 25 years, so I kind of know intuitively.
You look at it with the jaundiced eye of an expert. You know when it's hallucinating and you know when it's not. But if I was looking at it, I don't know which ones those are.
Exactly. So you really have to walk before you run. So I wouldn't jump right into those types of things. But really, for the very beginning, and the person who doesn't have a million, 10 million bucks, but wants to intelligently, not make money mistakes, basically, um, the things that are out there are fine. You, at this point, I would say you really don't need AI for the average person to have an intelligent approach to their personal investing world. There may come a time when an AI tool does a better job than the very basic advice we talked about 5 minutes ago, but we're not there yet.
Well, and I still think you always have to take some human emotion into decisions. I mean, there's always that a cold computer decision may always be technically right, but that doesn't mean it's always right for the person involved. And that's something to keep in mind. I'm going to go a little bit of field here, and I want your opinion on something. I have a problem recently where I don't always trust blog posts anymore because I find that a lot of blog posts are being written by AI. Are you seeing that in the financial industries?
100%. Somebody will take, a news release or a data release and get AI to write a comment about it and then put it on their blog as if they've, given this a ton of thought and here's their analysis. Um, that is going to be an endemic problem across all industries. Um, I know there are tools out there. You, I am sure, are expert in this as well. That can detect AI. That can detect AI. Um, but there is already widespread skepticism about that, and I have an example here too, where I've helped an investment firm hire some people, and they have a little um, test for a little writing exercise for the people to do, and they are absolutely paranoid that the writing sample not be AI generated, and if they expect that it might be, they immediately disqualify the
Mm-hmm.
candidate. I've had another financial firm looking for somebody. I gave them a resume. 5 minutes later, they came back and said, "This resume is AI generated. I don't want to look at this guy." So,
I've been on the receiving side of that where things that I have actually written have been flagged as being AI written.
when they weren't.
They were written by me. I wrote it,
Yeah, yeah.
but I
It's
read too much AI. So my writing style,
so you are almost a human chat GPTs.
right?
Okay.
Occupational hazard. So let's talk about some of the good stuff. I hate when our podcasts always talk about scary future, because I don't believe it. I believe our future is awesome. But like any road trip, there's going to be speed bumps and things that we have to avoid on the road. For the average consumer, what do you think some of the advantages are going to be over the next like 10, 15 years? What do you think is going to change, not in the stock market, but in the technology of investing?
I think it's going to be easier, more seamless. You'll have access to more information presented in better ways than you ever had. Um, and again, it's your choice as to how much of this tidal wave of information you want to consume or you're able to consume, but you'll also have advisors who can help you consume that, and advisors who can spend less time on the grunt work of their business and more time on the human side of their business. So they'll be able to spend time and walk you through, your own finances and how you want to pass money down and estate planning and tax planning. All of that stuff is going to get better. Tax planning is another instance where we all spend way too much on accountants and tax planners. It's like a friction on the economy how complex our tax industry is, and all the money that basically goes down a black hole to wind up getting us our modest tax refund at the end of the year. But that process will be smoother. Hallelujah. Where the middleman should, by and large, be eliminated. I don't understand why there can't be an AI tool that takes the most complex tax case and solves it for you and does your return, and the hundreds and hundreds of dollars you're spending can be saved. Same thing in the credit world, where you can more intelligently use credit in places because people know you better because they have access, for better or for worse, on more data from you. So there are aspects of your financial life that we all have that are absolutely 100% going to get better. But again, at the end of the day, you have to have judgment, have emotional intelligence. There's no tool that's going to substitute for that.
So my takeaway today is we're getting there, but we're not really there yet. AI is a great tool in the hands of an expert, but for an average consumer, stay connected to someone who can make sense of it all for you. And
100%.
get educated, get educated, get educated. Learn before you invest.
Yeah, exactly. And, as you dabble in these AI tools, just have a healthy skepticism. They're going to help you tremendously, but we're not there yet. And get somebody to help you if you can.
So you have a Substack. Tell me
I
about
do
it.
have a Substack. It's barano.substack.com. I write about the markets. I write about the foundation that I manage. I give you my performance, which almost nobody does in the financial world. Everybody talks about how smart they are in the stock market, and funnily enough, nobody tells you how they actually do in the stock market. So, I try to be as transparent as possible, and that's my little contribution.
And who's the ideal reader for this? And what income level? Is it a corporation? Is it a person? Who should read your Substack? Who's going to get the
So,
most out of it?
I think everybody from expert to beginner, I really try to make it accessible to everybody. Last week I talked about, how to make decisions based on objective indicators. So I talk about behavioral finance and really the basic issues for investors. And I mix it in with, how's the market doing, what I think about what's happening. And I think I do it in a kind of a common sense, simple way. I don't have a black box. I just worked on Wall Street long enough to know the guys who claim to have black boxes and an amazing system don't have an amazing system. So I manage a foundation in as simple a way as possible. My results are excellent, so it can be done.
Yeah, we will make sure to put the links all in our pages with this so people can find you. As we wrap this up, is there anything we didn't touch on? Anything that you think people should know?
No, I think the takeaway is it's as in many industries, it's going to change, the grunt work and the back office, the things you don't see. You're going to see benefits. But the smarter you can make yourself, the better you'll be able to tell the benefits from the drawbacks as AI advances and goes on its way.
James, thank you very much for being on with us tonight. I think this was awesome.
Thank you.
I am Victor Ciccarelli, talking with Mr. James Barrineau tonight. This has been the 40 Side Podcast. Thank you, everybody. Good night.
Thank you.